It's the fall of 2014. A semiconductor company in Sunnyvale, California is trading at around $2 a share. Not 200. 2. The company has lost money for most of the last 3 years. It has just cut a quarter of its workforce. It owes more than $2 billion. And by the cold arithmetic of its own balance sheet, it has maybe a few quarters of cash left before the lights go out. The name on the building is AMD. For 40 years it had lived in the shadow of one giant, Intel, a rival that outspent it roughly 10-1 and controlled the market that mattered. Now Wall Street had stopped pretending. Analysts wrote AMD off as a company that would be broken up and sold for parts. The smart money was betting on when, not if, and then something happened that almost nobody predicted. Over the next 8 years, that $2 stock would not just survive, it would climb past every target anyone set for it. And on one extraordinary day, the market would value AMD higher than the giant that had spent 4 decades trying to bury it. This is the story of how a company everyone had left for dead came back. To understand how far AMD fell, you have to understand what it always was. Advanced Micro Devices was founded in 1969, the same year Intel was finding its feet, by a salesman named Jerry Sanders. From the very start, it was the underdog. For years, its main job was to be a second source, to make legal copies of Intel's chips so that big customers like IBM would have a backup supplier. AMD didn't lead, it followed. It survived in the cracks of a market Intel dominated. There was one golden stretch. In 1999, AMD shipped a chip called the Athlon, and for a brief shining moment it actually beat Intel. It was the first processor to break the 1 GHz barrier. For a few years, AMD was the enthusiast choice, the scrappy challenger that made the giant sweat. But the giant had something AMD didn't: money, factories, and patience. Intel poured billions into manufacturing, locked up the laptop market, and slowly squeezed AMD back into the corner. By the late 2000s, the pattern had reset. Intel led, AMD followed. And then AMD did something that would nearly finish it off. It bet its future on a single new design, and got it catastrophically wrong. In 2011, AMD launched a new processor architecture called Bulldozer. On paper, it was clever. It crammed in more cores than Intel and promised to win on raw multitasking. In reality, it was slow. The individual cores were weak, the design was confusing, and on the everyday tasks most people actually did, Intel's chips simply ran circles around it. The reviews were brutal. Customers walked away. And once a chip company loses the performance crown, the damage compounds, because the entire industry, laptop makers, server buyers, gamers, quietly stops designing you in. The numbers tell the rest. AMD's share of the desktop processor market fell from nearly half to under a fifth. The company posted loss after loss. In 2014 alone, it cut around 7% of its staff, on top of earlier rounds that had already gutted the place. Its debt climbed past $2 billion. And the stock, which had once traded in the 40s, collapsed to around $2, the price of a cup of coffee. There was a real documented fear inside the company that it might not make payroll through the decade. This is the kind of story we dig into every week, the moment a company is staring at its own ending. If you want more of them, subscribe. Because what AMD did next is the part nobody saw coming. In October 2014, AMD named a new chief executive. Her name was Lisa Su. She was not a celebrity. She did not give grand speeches about changing the world. She was an engineer, and not in the loose way the word gets used in Silicon Valley. She held a doctorate in electrical engineering from MIT, where her research was on silicon on insulator transistors, the kind of deep physical chip work most CEOs would never touch. She had spent years at IBM and Texas Instruments building actual semiconductors. When she joined AMD in 2012, she ran the business that made custom chips for game consoles, the one part of the company that was quietly working. So when she took the top job, she didn't bring a slogan, she brought a diagnosis. Her view was almost insultingly simple, and exactly right. AMD's problem was not marketing, not branding, not strategy decks. The problem was that AMD's chips were not good enough. Fix the engineering, and the rest would follow. Reviewers, customers, the stock, none of it could be charmed. It could only be earned, one design at a time. And so, in her first months, with the company bleeding cash and the clock running down, Lisa Su made a decision that looked almost reckless, given how little money AMD had left. Here's the thing about the hole AMD was in. You can't patch your way out of a bad architecture. The bulldozer design wasn't one broken piece you could swap. The whole foundation was wrong. Its cores shared too much, stalled too often, and no amount of tuning would close the gap with Intel. AMD's own engineers knew it. They had spent years applying band-aids to a design that needed to be torn down. So Lisa Su and her engineering leaders faced a genuinely brutal choice. Option 1. Keep iterating on Bulldozer. It was cheaper, it was faster to ship, and it would keep some product on the shelves. It would also lose. Slowly, predictably, fatally. Option 2. Throw the architecture out and design a completely new processor core from a blank sheet of paper. That path could deliver a chip that actually competed. But a new architecture takes years and hundreds of millions of dollars. Money AMD didn't obviously have. And if it slipped, or if it underperformed, there would be no third try. The company would simply be gone before the chip ever shipped. Most struggling companies facing those odds choose option 1. They manage the decline. AMD chose to bet everything on the chip that didn't exist yet. The new architecture had a name, Zen, and to build it, AMD brought back one of the most respected chip designers in the industry, a quiet legend named Jim Keller, who had helped design AMD's Glory Days chips and had since built processors for Apple. Keller and the Zen team set a target that, inside the industry, sounded almost delusional. They wanted a 40% jump in instructions per clock, the core measure of how much work a processor does each tick, over AMD's existing chips, 40%. In a field where rivals fought over single-digit gains year to year, promising 40 was the kind of number that made engineers smirk. Intel's own improvements had slowed to a crawl, and here was the company on the edge of bankruptcy, with a fraction of the budget, promising a leap nobody had made in years. But the target wasn't bravado, it was math. The team had modeled, core by core, where the performance would come from. A redesigned pipeline, smart caching, simultaneous multi-threading that AMD hadn't had before. They knew the number was reachable. They just had to execute it, for years, in silence, while the world assumed AMD was already dead. There would be no previews, no victory laps, just engineers, heads down, building the one chip that had to work. And while they built, the company still had to find a way to keep paying them. While Zen was being built, AMD survived on an unglamorous lifeline: game consoles. Years earlier, AMD had won the chips inside both the PlayStation 4 and the Xbox One. Every console Sony and Microsoft sold put a little money in AMD's pocket. It wasn't exciting work, and the margins were thin, but it was steady cash, and steady cash was the only thing keeping the company breathing while its real future was still 2 years from shipping. This was the part of AMD that Lisa Su herself had run, and now it was holding up the whole building. Think about how precarious that is. The survival of one of the most important chip companies on Earth depended on people buying enough copies of FIFA and Call of Duty to fund a processor that didn't exist yet. There was no margin for error. A delay in Zen, a bad quarter in consoles, a single missed milestone, and the math stopped working. Inside the company, the discipline was relentless. Protect the cash, hit every deadline, don't promise anything you can't ship. For 2 long years, AMD lived hand-to-mouth, quietly, while the industry's attention was elsewhere. And then, in late 2016, the first Zen chips came back from the factory. The team powered them on, and the numbers they saw were better than even they had dared to promise. March 2017, AMD launched the first Zen processors under a new name, Ryzen, and the number that came back stunned even the people who built it. The team had promised 40% more performance per clock. They delivered 52. They had overshot the target nobody believed in the first place. But the raw performance wasn't even the part that broke the market. It was the price. AMD took its top 8-core chip and sold it for roughly half what Intel charged for 8 cores. Overnight, the math that had defined the industry for a decade was upside down. A gamer or a creator who wanted serious power no longer had to pay Intel's premium. The reviews landed like a thunderclap. After years of writing AMD off, the technology press scrambled to retest, recheck, and admit out loud that AMD was back. Enthusiasts who had quietly given up on the brand started building Ryzen machines and posting the benchmarks. For the first time in a decade, recommending an AMD processor wasn't a compromise, it was the smart choice. The stock began to move. And inside Intel, which had spent 10 years treating AMD as a solved problem, the alarm bells finally started to ring. The underdog wasn't just alive, it was on the attack. Ryzen proved AMD could design a great core, but the real masterstroke was hidden in how AMD built its chips, a decision that turned the company's biggest disadvantage into a weapon. Here's the problem every chipmaker faces. Making a processor is like printing on silicon, and silicon has flaws. The bigger a single chip is, the more likely a random defect lands somewhere on it and ruins the whole thing. Intel built big monolithic chips, one large slab of silicon. When they worked, they were excellent, but the bigger they got, the more of them came out broken, and AMD couldn't afford to throw away expensive silicon. So AMD did something different. Instead of one big chip, it built its processors out of several small ones, called chiplets, stitched together with a high-speed connection AMD called Infinity Fabric. Small chips have far fewer defects. They're cheaper to make, easier to mix and match, and you can simply glue more of them together to build a monster processor. A weakness, AMD's thin budget and inability to waste silicon, had forced an innovation that was genuinely better. While Intel struggled to make its giant chips at all, AMD was assembling 16, 32, 64 cores out of cheap little building blocks. And that scalability pointed straight at the most lucrative market in the entire industry, the one Intel had owned almost completely and guarded most jealously: the data center. Consumers care about a faster gaming PC, but that's not where the real money in chips lives. The fortune is in the data center, the servers that run the cloud, the websites, the AI, the entire digital economy. Those chips sell for thousands of dollars each, at enormous profit, and for years Intel owned that market almost completely, more than 95% of it. It was Intel's crown jewel, the business that funded everything else. So that is exactly where AMD aimed. In 2017, AMD took its chiplet design and scaled it up into a server processor called EPYC. Because of the chiplet trick, AMD could offer more cores, more memory, and more performance per dollar than Intel, in the one market where performance per dollar translates into millions of dollars of savings at scale. At first, the giants of the cloud were cautious. Switching server chips is risky and expensive, but the value was too large to ignore. One by one, the biggest names in computing, the cloud providers, the supercomputer builders, began qualifying AMD, then deploying it, then buying it by the truckload. The market share that had sat below 1% started to climb. Every point AMD gained came straight out of Intel's most profitable business. And as AMD pressed the attack, the giant did something that made the opening even wider. Intel stumbled, badly, and entirely on its own. For decades, Intel's deepest advantage wasn't design, it was manufacturing. Intel built its own chips in its own factories, and those factories were the most advanced on Earth. Every couple of years, Intel shrank its transistors, packing more power into less space, and nobody could keep up. That was the moat. And then the moat dried up. Intel promised a new generation of manufacturing, its 10-nanometer process, and it simply could not make it work. The technology slipped a year, then another, then another. Intel was stuck, building chip after chip on the same aging process, while its engineers fought a manufacturing problem they couldn't solve. Meanwhile, AMD had made a quiet, crucial decision. It didn't own factories anymore. It had spun them off years earlier, in the desperate days. So AMD simply went to the best chip manufacturer in the world, a Taiwanese company called TSMC, and bought access to the cutting edge. While Intel was trapped on its old process, AMD's chips were being built on TSMC's newer, denser, more efficient technology. For the first time in its history, AMD wasn't fighting uphill against Intel's manufacturing. It was ahead. The company that had spun off its factories out of weakness had accidentally bought itself a front-row seat to the most advanced silicon on the planet. And the gap between the two rivals didn't just close, it flipped. Then came the day that would have been unthinkable in 2014. In 2022, the stock market valued AMD more than Intel. Sit with that for a moment. The company that had spent 50 years as the second choice, the copycat, the discount option, the one trading at $2 and circling the drain, was now worth more than the giant that had defined the entire industry. The stock that bottomed near $2 had climbed past $100. $100,000 put into AMD at the bottom would have become millions, but the market cap was just the scoreboard. The real reversal was on the ground. AMD's server share, once a rounding error, had climbed toward a third of the market and kept rising. Its chips powered the world's fastest supercomputers. Its processors were the ones enthusiasts and engineers reached for by default. The performance crown that AMD had held for a few brief months in 1999, and then lost for 2 decades, was back in Sunnyvale, and this time it didn't look like it was leaving. In 8 years, an engineer and her team had taken a company written off as a corpse and made it the one to beat. And they weren't finished. They were already aiming at an even bigger prize. Beating Intel turned out to be the warm-up, because while AMD was clawing its way back in processors, a new gold rush had begun. Artificial intelligence. And the chips that train AI aren't the processors AMD had just conquered. They're graphics chips, repurposed into engines for machine learning. That market belonged almost completely to one company, NVIDIA. So AMD did what it had done before, it aimed at the leader. In 2023, it launched a line of AI accelerators called the MI300 series, massive chiplet-based chips built to go head-to-head with NVIDIA in the data centers powering the AI boom. It strengthened its hand by acquiring Xilinx, a specialist in flexible programmable chips, in one of the largest deals in semiconductor history. The challenge is enormous. NVIDIA's lead in AI is wider and deeper than Intel's ever was, protected not just by hardware, but by a decade of software. AMD is once again the underdog taking on a giant that looks unbeatable, but that is precisely the position AMD has climbed out of before. The company that was worth $2 a share now ships some of the most advanced silicon on the planet, and it is betting again that patient engineering can close a gap everyone says is too large. Whether it works is the next chapter. It's tempting to tell this story as a miracle. The dying company, the brilliant new leader, the impossible comeback, but that's not quite what happened, and the real version is more useful. AMD didn't come back because of a slogan or a stroke of genius. It came back because it made a brutally honest diagnosis. Our chips aren't good enough. And then did the slow, unglamorous work of fixing it. It bet the company on a new architecture when the safe move was to manage the decline. It turned its poverty into an advantage, building cheap small chips when it couldn't afford big ones. It bought the best manufacturing in the world instead of clinging to factories it could no longer fund. None of those were magic. They were decisions. Patient, disciplined, and made under the kind of pressure that breaks most companies. There was no guarantee any of it would work. For 2 years, the people building Zen had no proof their bet would pay off, only the conviction that the math was right and the discipline to keep going. A company everyone had written off at $2 a share became the one to beat, not by believing harder, but by building better. From almost nothing. If a story like this is worth your time, subscribe, there are more of them coming.